Welcome traders, this is Vishal and you're watching Weekly Sectoral Analysis, episode number 35. Now people who are watching this particular video for the first time who don't know me, I'm a full-time trader and I make these type of videos for other traders so they can understand how market is going to pan out in the next few days. While sharing all these important sectoral index, I might also share few of the stocks which I feel could move on the upside or on the downside in next few days. So watch the video till the last. Only then you will be able to get the complete benefit and complete understanding how markets might pan out in the next few days. So without any delay, let's start the educational video. Now currently we are looking at the Nifty Futures daily and the weekly chart. On the left hand side I have the daily chart and on the right hand side I have the weekly chart. So from the weekly chart we can clearly see that Nifty Futures is still in a downtrend and it has been able to bounce back from this 23.6% Fibonacci retracement. And the reason for bouncing from this particular retracement is obviously we do have a candlestick cluster over here. And this particular trend is exceptionally large in comparison to all of the recent uptrends in last few years in context of the weekly chart. So that is the reason 23.6% Fibonacci retracement is very important at this point of time. The candle which has been made over here is a bullish belt hold, and if we combine these two candles, obviously it looks like a bullish engulfing pattern which looks positive. But immediately when I look at the daily time frame charts, we can see that this is a mere bounce back. The trend in the weekly chart is still down. The trend in the daily chart is flat right now. Neither it is down, neither it is up. And this is only a pullback. And if you can see properly, this black colored price band, which I have highlighted, I'll just share the levels with you. 16,992, you can say 17,000 to say, let it make a round figure as 16,750. This entire price band can act as a very strong resistance. And considering that we do have little bit of pullback left, because you can see over here, this particular candle is a hammer. In fact, this particular candle doesn't have that much of importance because hammer, when it is made at a bottom, say for example, we have a hammer over here, then the chances of an up move is far better and the overall formation is exceptionally strong. But in the middle of a trend, it makes no sense to me. And yes, we might have a little bit of pullback left and we could head towards 16,900 and maybe even 17,000. But according to me, it is going to be just a pullback. This is nothing more than that. All right. Now let's analyze Bank Nifty Futures. If I look at the Bank Nifty Futures chart, all right, you can see that the trend is currently down. And what we have over here is a high wave candle. And with this high wave candle, I would like to plot this Fibonacci extension on the downside. What has happened is that the bounce back has occurred from this 127.20% Fibonacci extension. Now, is this a support, a very strong support? According to me, not that much. But out of 10 bounce backs, which generally happen from this particular Fibonacci extension, out of them 30 to 40% are exceptionally large. So considering that probability and the type of bounce back which we have seen so far in Bank Nifty Futures, we can say that maybe little bit more pullback could be left, and this entire band, you can say 36,400 or 410 till 35,165, this entire band of Bank Nifty Futures can act as a strong resistance. Now, if you look at the overall candles which have been made, I can completely understand that the starting point of this band itself is acting as a very strong resistance, because the first candle, it tried to surpass this particular price band and we had a red candle. The next candle which we can see over here is a inverted hammer. So yes, it is a possibility that we might just go a little bit higher and then again start coming down. So we have to take this with a pinch of salt, and I am more of a breakdown trader or a breakout trader and even a swing trader. I do not trade pullbacks. All right. So be very cautious. I'm not a person who would like to go long just for a couple of 100 points. All right. That's my point of view basically. Now, private banks. Now, if you look at the private banking chart, again, it is very much similar to the Bank Nifty Futures chart. Again, I'm pretty sure that this bounce back is happening in the weekly time frame chart of Bank Nifty Futures from the 127.20% extension. And that is what is evident over here. And if you see in the banking, private banking index in the daily chart, we can see there is a horizontal price band which is still little bit on the upside. So in case if the price rallies, then this entire band from 18,520 to 18,100, this entire band might act as a very stiff resistance for this particular index. Now, if anyone wants to find out which particular stock has little bit more, more space left to travel on the upside, then I think it could be ICICI Bank. The reason is, again, we have a high wave candle at support, and generally high wave candles are a signal that the stock or that particular index is extremely overstretched in one particular direction, and the direction over here so far has been down. So it seems that the stock is extremely overstretched on the downside. And in the daily chart, we have a hammer, we do have a bullish bell toll. So these are signs that probably ICICI Bank is the stock which could even continuing pullback, even further pullback is probable in this particular stock. And in fact, if you see this particular Fibonacci extension, and then this particular stock is seeing a pullback in the daily chart and a support from the 423.6% Fibonacci extension. Generally, 423.6% Fibonacci extensions are very rare in the daily time frame chart. So this shows the extent of overextended, selling which happened in the ICICI Bank in the daily time frame chart. All right. Now let's check the PSU banking index. In the PSU banking space, you can see PSU banks are a little bit better placed in comparison to the private banking pack, because private banks did make a new low. They did break the previous low. PSU banks, if you see, they have not been able to close below this particular previous low in the weekly time frame charts. Now, if you see, even the RSI is almost over there. So the RSI and the price both are at almost at the same level. And even this particular candle is a bullish engulfing, it's a bullish bell toll candle. And if we combine these two candles, it's a bullish engulfing pattern. But again, the trend is currently flat in the weekly time frame charts. In the daily time frame, the trend is also flat, and maybe if the pullback continues, we could probably test somewhere around 2750 or 2770 in the PSU banking pack. Metals. Now metals, if you check properly the weekly time frame chart, the RSI is making a sort of base. Similar sort of thing is visible in the price, and slowly and steadily the index of metal is heading higher. Even in the daily chart, overall trend seems to be strong. Now, there are two stocks which I like, because in metal pack also, if you just pick up any particular stock and just start buying it, I don't think you will be able to make money, because if you see, say for example, SAIL is not looking that strong. It is clearly visible. The overall trend is down, and continuously it is making lower lows, lower highs. So if you just pick up any damn stock in the metal pack, it will be very difficult for you to make money. From my side, I'll be sharing two stocks. One is Tata Steel, you can see. And disclaimer, I am holding this stock in my trading portfolio, and it's a positional trade, by the way. Okay, so this is one stock which looks good. And the second one is obviously Hindalco, which has been outperforming from a very long time. In fact, even when the markets corrected very badly, this stock retraced and immediately started going up, and it didn't see back. So in case if there is a short-term dip or consolidation, then swing traders should keep their eyes open on this particular stock. Autopack. Autopack, if you see, the trend is down, and the particular auto index has found support from the 161.80% Fibonacci extension. And if you check in the daily time frame chart, the trend is still down. This is a mere pullback, nothing more than that. We have a hammer candle. This is a bullish bell toll. And as per my analysis, if you see, this was the previous low. And this previous low is extremely strong because the wick of this particular candle is pretty long. So when this wick of the candle and the Fibonacci retracement, when they combine together, it makes this particular resistance very, very strong. So if we close above this particular resistance and sustain, then probably the pullback may continue. Stocks which could pull back in next few days could be Tata Motors. I feel there is a little bit more upside left in Tata Motors, and even Maruti. These are the two stocks which might see a little bit more pullback on the upside. But again, I'm not a person who tries to buy pullbacks. I'm never a person who is trying to buy a pullback or even trying to short when the stock is trying to top out. I'm more of a trend follower or a swing trader. All right. So this is just, I'm just sharing my views with you. These are not any trades. Financial pack. Now let's look at the weekly index. Now in the weekly time frame of the financial sector, we can see that the price has bounced from the 161.80% Fibonacci extension. The trend is down as prices are below the moving averages. And the similar thing is visible in the daily time frame chart, that the trend is down. All right, the trend is down, and prices are below the moving averages. And if you see this particular horizontal price band from 17,140 to 16,733, this entire band is coexisting with this candlestick cluster. So in case if the pullback continues, there's a very high chance that this particular price band will give extreme strong resistance to this particular pack. So once we can see stocks trading somewhere over here, and then if you see some serious selling pressure coming up, you could find a couple of stocks for swing trades. IT pack. Now IT pack has suddenly taken a U-turn. It is a very big surprise. Let me just have a look at the monthly time frame chart. In the monthly time frame chart, somehow I still don't like the overall setup which is visible to me. But in the weekly charts, what we can see is there is a small hammer. It is being made at a decent support, not very strong. And then we have two positive candles. And many times I have seen, and many times even you would have witnessed, then when markets are weak, then pharma and IT does act as a possibly you can say a defensive sector or something. But this time somehow the monthly time frame charts of IT index are looking very, very weak. And if you look at the daily time frame of the IT pack, then we can clearly see that the trend is still flat. It's not up. This is a mere pullback. But now what has happened is there are one or two stocks which have certainly started outperforming. The first stock which has started outperforming is Infosys. But the candles which have been made in last 2-3 days are still not interesting. But yes, the weekly chart has started looking good. So one stock from my side, in case if IT pack goes through a selling spree, okay, if at all, and if you get if you use your own trading setups, and if you see selling coming up in the IT pack, then the stock to pick up for a swing shot would be TCS from my side. All right, TCS is not looking that strong in comparison to other stocks of IT pack. Pharma. Now, Pharma, you can see immediately when you open this weekly time frame, you can immediately see the size of the candle, which has come up over here from the 161.80% extension is very large. But my friends, the trend is still down. The trend is still down. It is certainly not up. And the trend in the daily time frame chart is still flat. So we need to see how things pan out. And you can see there is a trend line resistance over here. That 2 points have been matched. Third point is yet to be seen. So in case if we see some sort of close above this trend line and sustaining, maybe the trend, overall trend will change in the daily time frame chart. But otherwise, for me, the Pharma pack is something which I will trade very, very carefully. But there is one stock which has nothing to do with its sectoral index, and that is Sun Pharma. Sun Pharma is looking extremely positive. So in case if there is a trend line breakout in the Pharma pack, basically in the Pharma daily chart, the trend line breakout, which I just shared with you. And then if you see some sort of bullishness coming up in the Sun Pharma stock, then you could keep this particular stock in your watch list. FMCG pack. FMCG pack has given a decent bounce back. If you look at the weekly time frame chart, things are looking okay. And we do have a bullish engulfing pattern over here. This is a very strong candle. And this is a sort of a small, you can say a high wave candle. The size should have been larger. And the body, which we can see over here, the body should have been smaller. Then overall pattern would be extremely strong. According to me, this is just a mere pullback. This is still a sector which is looking very weak. And if you see the stock ITC, on the contrary, now this stock has suddenly started looking strong. If it crosses this particular line, then I can say that some sort of upside is possible in ITC. And one another stock, Hindustan Unilever, is exactly the opposite. It is looking very, very weak. Okay. So if there is a pullback, probably till the level of 2200 or 2215 or maybe even 2230, start looking for signs of weakness. And once, if the sell-off starts in the FMCG pack, you could concentrate on this particular stock. Realty pack. Now, if you look at the realty pack, the trend is flat in the weekly time frame. It has been able to bounce back from its 161.80% Fibonacci extension. And in the daily chart, the trend is currently flat. And this entire band, especially this lower part, the starting point of this band is a very, very strong resistance. It's not a mere resistance, but a very strong resistance. And a lot of buying pressure will be required to surpass this particular level of 444 and go up higher till 460. So anywhere, if you see this index trading in this zone, and then if you see suddenly selling pressure coming up, start finding stocks in the realty sector for swing short trades. Consumer pack. Consumer pack, according to me, is still in a downtrend. This is a mere pullback, but if you see, this is again a positive candle pattern, because what has happened over here is it's a bullish piercing pattern. This is a negative candle. This is a positive candle which has opened below the lows of this particular candle, and then it has been able to close above the 50% real body of the previous candle. So this is a bullish piercing pattern in the weekly chart at a decent support. And if you look at the daily time frame chart, this is a mere pullback. So things are pretty confusing. Only if you see any sort of move coming up above this particular 78.6% Fibonacci retracement in the consumer pack, only then we'll be able to see the positivity continuing in this pack. Otherwise, again, I can say that this particular resistance band is very, very strong, and we need to wait and watch patiently till next week or next few days to see how things pan out. What happens when the prices, try to trade in this particular level. Only then I'll be able to comment. Mid-cap index. Now, mid-cap index, we can see the trend is down. It has been able to bounce back from a decent support, and currently the pullback is going on, and probably the pullback might continue. And the trend is flat in the daily time frame chart, and probably the prices may hit very soon this particular level, probably 28,777. And if the pullback is very, very strong in this pack, it could even continue till 29,271. But my friends, please remember, just don't be very, very crazy about this mid-cap index only because the weekly charts are looking good. Okay, only because of the weekly charts are looking good. Do not start buying very aggressively, because generally in a market where overall prices are coming down, what happens is when markets come down, it might make positive candles, just like it did make over here, and then we saw a rally, and then suddenly there was a sell-off. So this could also be the same scenario where positive candles are coming up in each and every sector, and suddenly there is a pullback, and people start coming up in a bullish mindset, and after a while, when the index or that particular stock makes a high, again the sell-off starts. So you have to be very, very clever while picking up your trades. Don't just push trades because prices are going higher. Be very, very smart, and kindly look at the volume which is being generated in Nifty Futures. And I'll talk about the same in my next video of Nifty short-term view, because generally I do share 1 or 2 videos about Nifty Futures in weekdays. All right. So whenever you're trading, kindly watch the volume which is being generated in Nifty Futures. All right. So I hope this video was pretty helpful to you. Share this video with other people, with other traders who might find it helpful. Do share your comments below. And if you like my work, if you want to support my work, kindly subscribe the channel. Thank you.